Shashank Srivastava joins us now, Senior Executive Officer with Maruti. Let's say hello to him. I can already see the jackets are out in Delhi. Is it really cold in Delhi, is it? Jackets are out.
Yeah, I think the minimum temperature 6.8 yesterday.
Oh my God.
Yeah, in the morning a little bit cold.
I'm coming in December and to need to carry extra jacket. Muffler वगैरह भी लाऊं?
Yes, I think so.
Muffler वगैरह gloves तो की जरूरत नहीं पड़ेगी, right?
नहीं, gloves की जरूरत नहीं पड़ेगी. Yeah.
Okay, good.
But I think jacket will be on.
Good. Okay.
Yeah.
When we spoke to you last, you were reasonably confident that even post Diwali, the momentum will remain strong. Has that worked out as per what you indicated?
Yeah, so surely, if you look at December so far for Maruti Suzuki in the industry also, the bookings are quite positive, about 12% up over last year. Inquiries are up about 22%. So it looks like the momentum continues. And the retail, I think, should be strong in December.
Most of the auto companies are considering a price hike, and price hike at a time when demand is also strong will straight away add to the bottom line. Can I assume the obvious that now we are in for margin expansion, better numbers, better growth, because everything is going right for the auto company sector per se. Demand is strong, commodity prices are benign, and a price hike is being considered.
Yeah, so it really depends on the inflationary pressures, and you're right in terms of commodities. If they remain benign, then it's a different matter. But I think steel prices look like firming up a little bit, and therefore I think it really depends. The profitability will depend on what the cost structure emerges from here. 75 to 77% of the total cost actually for OEMs and auto is material cost. So obviously commodity price movement will determine to a large extent the margin movement.
Shashank, our last interaction, what really stood out was the inventory levels that you were sitting at. Going into 2024, what is your sense on what kind of levels would you start the year with?
I think great question, because while I just mentioned the demand parameters being stable or actually positive in terms of inquiry and retail, on the stock side, I think the beginning of December stock was a little higher than what normally is for the December beginning. But remember, in December, industry tries to keep the stock levels down because of the model year change. So that's the reason why the wholesale numbers in the industry in December are generally very low. In fact, last year they were just 275,000, as against retail last year was about 411,000. So there was a huge difference between retail and wholesale, and that's a story which repeats every December, because industry and the channel partners would like to keep the stock down in the December end. And that's what is happening this year also, with the added sort of disadvantage. There is slightly higher levels of inventory as of 1st December. Therefore, it's very crucial in December to have very large retails, and that's what all the OEMs are trying to do. So, and you can also see the wholesale numbers this month will be lower in the industry. Current estimates are actually about 280 to 85,000.
So at your end, what is it that you're doing to resolve the high inventory situation?
Yeah, first of all, of course, we have limited our wholesales, which is a push to the dealers for adding to the inventory, and then we have rolled out a large sales promotion schemes, including some of the highest levels that you have seen in recent past, so that the inventory levels at the dealerships get cleared. In fact, you asked me a question about how much was the inventory level last year. The last year inventory levels was just around, in the industry, you will be surprised, about 50,000, 55,000. This year, even with the very high retail estimation and a lower wholesale estimation, inventory levels will be, to our current estimates, about 120, 125,000.
Are inventory levels pretty much same for sedan and for SUV also?
Yeah, generally because we're at the remember the average retails in a month around 330 340,000 for the industry. Current inventory around 340,000 335,000. So that's like a 1 month stock. Then 120 would actually be about 10 12 days of stock. And that at that level of lower level of stock across the segments, it would be roughly similar.
Are we reaching that point in the SUV market where the market gain share of SUV is likely to peak out? Look, it's moved from 20% to 55%, but there would be a limit at which SUV as percentage of the total basket will peak out. Could that be 50? Could that be 60? Could that be 70? What is your understanding?
Yeah. So again, great question because that's another thing which the industry is grappling. The rapid rise in the SUV segment, you rightly pointed out, 26% in 2019, come to about 53% last month. Although April to November figures show it's about 48.9%, pretty high. Generally speaking, our research shows that it should plateau around the 54, 55, 54% mark.
Market share has gone to 20% there broadly within the SUV market.
Yes,
Do
yes.
you think do you have endeavor to maintain at 20, or you right now are looking at gaining more market share there? What would be your SUV strategy?
Yeah, so as I think in our last interaction, I did mention that in order to achieve our midterm objective of 50% share, we need to increase the share in SUV. And that's the reason why we have launched and strengthened our portfolio in the last year with the new Brezza, the Vitara, the Fronx, the Jimny. And that has enabled us to become the number one SUV manufacturer in H1 of this year. Our market share currently around the 22.3% in the SUV sector. Hopefully, we will add a little bit more. Of course, the target with this 50% of the segments of the industry being the SUV segment, if you do a back of the envelope calculation with a 65% share in the non-SUV, we need to get to about 35% in the SUV sector to get to 50% overall. So still we have a lot of ground to cover. We are happy currently with the 20 to 23%, but obviously we have to aim up to about 35% in the medium term in order to achieve the objective of 50% share.
I just want to understand as well a quick outlook from you as to what has been the response to Jimny, how it's done.
So Jimny, initially we had a very good. We had about 43,000 bookings first few months. It has done great numbers, great numbers for that niche segment. That is, last couple of months, actually the retails have been less than what we had been expecting. So what had really happened was that the demand for the Jimny, about 50% automatic transmission, about 55% automatic transmission, and about 45% manual transmission. We had some constraints in supplying the automatic transmission. So we had necessarily to produce a larger number of manual transmission, for which the stock went up because, as I just mentioned, the retails in the last couple of months had not been good. And that's the reason why we have a very good sales promotion scheme this December, because we would like to reduce the stock, as I mentioned in the earlier part of our conversation, so that the carryover of FY23 stock into the calendar year 24 is to the minimum.
All right, Shashank, good to have you on board. Thanks so much for taking time out and joining in.